Hello guys, we are going to check a little bit our portfolio and what's going on in the market. So last month, the month of March, we get different small dividends as you can see. Standard & Poor's, Global, Walgreen Boots, 3M, Mercury General, Totsi Roll, Broadcom. So we are getting paid every month. Walgreen Boots beat the estimates of the market, so start to go up a bit. And then we top up with £100 to do the shopping of this month. Something I would like to start doing now is making a little some comments about the market with people who have more knowledge than me. The situation is, years ago I used to work at different universities doing courses about finance and the stock market to the students. Whatever I said is never financial advice. This is just for fun. You have to do your own research, and there are people out there with way more knowledge than me. I just try to collect and read as much information as I can get to have my own opinion about what's going on in the market. So far, what people I following, people I read, I try to read the best, and so far is working. So I knew we are going to be in a recession because we are going to be in a recession in 2023. But I want to share with you some information from guys who have more knowledge than me. On the top, you can see who is the Twitter account. You can follow them. I think these guys are really good. The bottom, you know how Twitter is, 13th of March 2023. So, for example, in this chart, we see that I have a lot of charts, so I don't want to make this video forever long, but you get a glimpse about what's going on into the market. Okay, so if I see this chart, I understand it's going to be a recession, you know. So it's pretty obvious. Even what's happening now is a stock market is a bear market rally. The Fed is start to inject money into the stock market again, but I don't think for long term is gonna last. That's my view. That's one. Then another one, New York Fed probability of recession, highest readings in the early 80s, no false signal. Another sign we're going into recession. Then Purusha Sena keeps saying in another tweet, history shows bear market lows lies ahead. Historically, Standard & Poor's has bottomed when the unemployed claims have peaked, and this is not happening yet. So unemployment rate in the United States, it has been still low. The labor market is still very strong in the United States. That means if you follow data, in theory, unemployment rate should start to go up. So the stock market about summer, autumn, I don't know, July, August, September should reach the bottom. So that's my views, and that's the views of the people who have way more knowledge than me. I just want to share with you what they are saying in different tweets. Chart of the week, record real estate valuations, why this might be the most important chart now. That's another thing. Properties and real estate market have been skyrocketing post-pandemic. The properties are still expensive, and now the properties are collapsing. Okay, there are different charts here I'm going to show you. So this is going to happen in the next months, not now, in the next months. And because it's going to happen in the next months is when the prices of the houses drop, people start to lose their jobs, construction works, maintenance, marketing, bars, whatever. When all this bad news goes into the stock market should drop. All right, that's in theory. Another one. This is a very good one. Markets are forward looking, typically through before we exit a recession, however, never previously before recession starts. So, what is the other one? I check another one. Basically, the stock market reached the bottom when the recession starts, never before. Okay, so um, the PMI through, that's another one, very very interesting, and I want to share with you more charts, because the PMI is dropping, so that's a bad sign for the economy as well. California bubbles bursting. Well, as you can see, since or when 2022 is minus 18, it is still have a lot of room to go down. So the real estate bubble burst. Next one, the stock. This is for Game of Trades, a very good account you should follow, and a very good YouTube channel. The stock market bottoms after the unemployed rate rises. Is unemployed rate is not rising yet much or nothing. So again, the stock market should reach the bottom in the next months, not now. Okay. As you can see, I'm sharing different charts from different people who have a lot more knowledge than me. So then you have to do your own research and do whatever you want, basically. Total delinquent consumer loans in the United States, as you can see, again, as high as the crisis in 2007 and 8. That's bad. That's really bad. Okay. What's gonna happen in the future? I don't know. You tell me. Then, mortgage applications to buy a house just dropped 39 year over year in March. Another very bad news for the market. Okay, that's not very good. I think real estate should drop. When real estate drop, people cannot sell the house. It's trouble in the economy in the next months, in my view. Again, then either mortgage rates need to come down. Come down, or house prices need to come down, or both. You can just jump from 47k in qualifying income to 86,000 and play make believe that everything is just going to work itself out. Housing will be ice cold until this spike stops being a spike. Obviously, prices of real estate has been very high. It has to drop. I just share different accounts from different people, different views. Everyone agree about what's going on in the market. Then recession seems inevitable later this year. Standard & Poor's usually declines heading into a recession again. When the recession starts, Standard & Poor's historically drops when recession starts, and by the time official recession is declared, it's already too late. So as you can see in the chart, this is probably the last rally into the bear market, and recession is ahead, and then the stock market should reach the bottom between summer and autumn, and obviously we'll have to buy like crazy. Then the ISM manufacturing PMI is signaling much lower margins ahead, as you can see here. So United States, in the chart is saying United States corporate profitability expected to slow down in the coming months. As you can see, all these charts are from last month. All of these charts are from March or today, 1st or 2nd of April. These charts are not from 1 year ago. Okay, so this is the what's going on in the market right now. So with 3-4 weeks before I post this video. So my decisions about which companies to buy is based on what's happening in the market, what these people are saying about the market. Then Charlie Villaggio, another fantastic Twitter account. US housing affordability is worse today than the peak of the last housing bubble. I mean, what else do you need to hear? Are you reading what I'm reading? That's bad, okay? The median American household will need to spend 42.9 of their income to afford the median price home. That I don't know in your language. In my language means the prices of the real estate needs to drop like a stone, needs to drop a lot more to be affordable. All right. When inflation is kicking up, because inflation is still up, people cannot really afford the mortgage. The mortgage. I mean, I think potentially could be a decent crisis in front of us. So why my portfolio suffered a lot last month? Because when the stock market goes up, companies with high beta and mega caps skyrocketing, and the companies I have is mostly defensive, very defensive. So it doesn't go high as much. It doesn't go up a lot higher because they're very defensive. I will keep buying defensive companies with very low beta and good cash flow till I see better charts and I see the recession is over, or I start to see better numbers. Game of trades, real estate should be the next piece to fall. This chart is for the 18th of March, so like 2 weeks ago. Applications to purchase homes has been dropping like a stone. It's now at the lowest level since 1995. Again, it doesn't look very positive to me. Purus Asena again. Conference board lay declined again in February. This is the 17th of March, this tweet. Hard landing coming soon. Recession is around the corner. Stock market bottom when is the recession? So that means, if I understand everything right, should be between June to November. Let's say these months is when the stock market should reach the bottom, not before. If recent story is any guide, this yield surge in treasury bills is a precursor to disaster for the Standard & Poor's 500. Well, US 6 months treasury bill yields are currently 3 multiplied by 3, the Standard & Poor's, blah blah blah, just saying. Anyway, so I'm gonna try to make the tweet and the chart bigger. So what this guy is saying is basically is a disaster ahead. Okay, so yes. Then Morgan Stanley leading indicator, being fairly accurate for 20 years. Again, another one. We are going into a recession. What can we do? Well, we have to keep buying companies, trying to keep beating the major ETFs, but low beta. So even if the stock market drops, our portfolio is gonna hold, is gonna stay there strong. No company is going to collapse, hopefully, in our portfolio, and everything should be giggling and laughing. Game of trades. Jobless claims rise following yield curve inversions, unemployment rate rises, rates systematically increases. Curve inversions have always correlated with rising unemployment rates since the 60s. Yeah, and as you can see now, like explaining Game of Trades, it was explaining another tweet. Unemployment rate, it has been historically low now. For the stock market to reach the bottom, unemployment rate first needs to go up. When unemployment rate starts to go up for a while, for a bit, historically is when the stock market reached the bottom. It's not happening yet. The unemployment rate is still very low. Companies start to tell people to go home, basically, but this is still the very early days, so it's still more pain ahead. Top-down charts, another fantastic account. Global recession 2023. All leading indicators continue to point to recession, and there has been nothing lately to negate or confound that signal. Again, we are going into recession. Unemployment, stock market, blah, blah, blah. Rising unemployment rates typically result in sharp drawdowns in the stock market, exactly what I just said a few minutes ago. So, again, I think the worst is coming. I don't want to be doom and gloom, but that's the situation. Markets are forward-looking, but Standard & Poor's has never bottomed before the start of a recession. That's very important. So when we have to buy, I think more different kind of companies in the future. 2 months of job cuts in the 23, highest since 2009. This tweet is from the 9th of March, a few weeks ago. No landing, soft landing, pipe dream. So companies start to sack people, tell them to go home, there's no more space, there's no more work for them. Bar chart, since 1965, the leading economic index has successfully predicted every recession, and obviously it's going to predict this one as well. Everyone should bookmark this chart. History shows pivots will trigger the real crash. It's going to be this time different. I don't think so. I think the market is going to go lower. We will see. List and Saunders recession probability model from the economics has rising all-time high. Again, recession. The money supply officially contracting. It has been only happening 4 previous times. Each time a depression with double-digit unemployment rates follow it. Here is a weird relationship. South Korea exports blue historically lead Standard & Poor's 500 trailing EPS. So if you see, it's going to still be a big drop into the market following this weird relationship between South Korea exports and the Standard & Poor's 500. We saw this as well. So this is everything for now, guys. Like I said, you can comment if you want, if you agree or you disagree. I just want to share, I would like to share more charts every month, the way I'm doing it now. If you like, good. If you don't like, I don't care. That's the situation. It's my money. Remember, this is not financial advice. It's a tiny portion of my portfolio. All my money I have in different brokers. I just do this for fun and to share my knowledge and the knowledge of all people who knows more than me. All the credit for these people, from Purusha Sena, top-down charts. Stanley Druckenmiller was saying we're going into a hard landing in 2023 as well. The one of the best hedge funds managers in the planet. I have a lot of respect for these people. They know it already. I have a lot of respect for them. So Yeah, well, guys, I hope you have a nice evening and see you later.